Welcome to TradeTheMBA.com. This is John. This report is for the 24th. Well, we've got that continued pivot of magenta, and it moved right below white. Happened fairly early, but we also got the cross of steel below cyan, which is something we were looking for to present as more weakness. Now, we still don't have a shakeout move lower yet, but if there's a continuation with this, it becomes fairly easy. Anything below that 50% level, 44.12 definitely is going to be a continuation short. Still the potential that this pulls back up simply because magenta hasn't moved below yellow. If we see that progress further and it does dip below that, then that would clearly be an indication that there's going to be additional selling within that. Much clearer here from an NQ standpoint. It already crossed over. When both are trailing down this fast, it just becomes a question of whether or not selling speeds up fast enough to move past the yellow, really giving a clean indication that it's going to be broader than just a temporary intraday kind of setup. And we'll, of course, see that on the 50K and 5K charts on the ES. Clearly, Euro, again, doing absolutely nothing at this particular, and surprisingly holding up at this particular level, and clearly there's intervention there because Eurozone, with the situations with gas products, fuel costs, and everything, I mean, the cost of everything is just rising exponentially here, and there's just no answers for the ECB whatsoever, even if they try and create these other facilities, because there really aren't any buyers for them, and the banks are all holding those ECB bonds as collateral, so it's collateral worthless, which that's one of those cascade events that, you know, similar kind of thing happened in 08 when people were holding mortgage-backed securities. It didn't work out so well, even though at the time they had a face value of a certain amount. What I had been talking about before and finally took place today, Russia announcing that if you're not a buddy of theirs, they're going to require payment in rubles. So people are going to have to get rubles in large order in order to keep the gas flowing. So they're saying, hey, we're going to maintain our contract, but you just have to pay us in rubles, which certainly is going to support the ruble and the matter of billions that will be needed in rubles to support that. Gold, of course, coming back off that and clearly within that buy configuration right there. Hadn't really been in a serious sell with the steel reset this far down below, coming past even crossed back above the zero line. So that's why this has been mostly just a retest of the 50% consolidation within the current setup. And should things progress any more negative, like with oil, which boom, it was a pretty clear move right back up towards those peak levels, though. Weight rising above there, but that's clean with green riding above. So as long as that maintains it, we can expect that oil is going to continue to rise. And if that continues to get squeezed, the longer this protracts, though, is the real problem. This is something I talked about as we were escalating here without any retraces. It just compounds the inflationary impact over time. And that has a serious effect. And I pointed out we had the articles about home sales dropping off quickly. And so this is what the market has been anticipating with some of this rise that we've seen, is the fact that, well, the Fed can't continue its tightening and may even have to cut and ease in order to keep the economy from moving into recession. The question is, if you do that, you're going to spike inflationary pressures even further. So they're caught between a rock and a hard place, and it's starting to become a realization, particularly in the commodities world, where margin calls on that are just skyrocketing as the range movements, you've seen it in nickel, it happened again today, limit up. All they're going to be able to do is put restrictions on the markets, but that never really works, because as soon as there's availability to get out, move, or do anything. So this is that effect of when you've cut off a huge portion of the world's supply of various products, they're just not going to be available. We haven't even talked about the food potential crisis and things like that with the fertilizers and things like that that come out of Russia, the fact that Ukraine isn't going to be producing any of the agri products that it's been doing, and that's a significant impact from a world hunger standpoint. So, and these were things I talked about a month ago, where the potential for buildup on these things cascades to a point where everything seems like it's manageable to a point until it's just completely falls apart. And you got to be aware of that. Saying it's happening now, no, it's already happened. The question is, will they be able to manage what's already happened? And for now, they've been able to hold these things together. And obviously, if it's just a question of when it starts to break down, recognizing those turn signals to be prepared for it. And so, in this case, Bitcoin holding on to these gains and most likely going to continue to hold on to them, if not continue to rise as a store outside of dollars, euros, because what are you going to do with either of those? And clearly, the only one that's so far unscathed has been China with the yuan, but you saw the U.S. put individual sanctions just the other day on individuals. So all these relationships are souring because this monetization war has really created a serious concern, because if you don't trust the agreements that you're making with people in any of the different currencies, then you have a complete breakdown, and then what becomes the only thing that's relevant? And obviously people are going to go to well, in some cases precious metals, but actual goods. Those will be the only thing that have backing. And so we're looking also at ETH here, a little bit of wild ride, but as it catches movement, fills back in on, in this case, we have the positive extremes that started right there. So the breakout move filled it right back in. Beautiful from our readings of the paint bar. All that's been pretty clean. Here from a 50K standpoint, you can see as we cross back down below the 25, white moved back above red, and that's the key point. Happened to be marked on the day marker, and literally continued the entire day in that red category from a paint bar standpoint. So pretty clear from that standpoint exactly where things were. It started in the pre-market because this, again, the European session, recognizing these details because it's far more closer to home, and the effects of it are prescient in the fact that they're seeing it on a daily basis. Of course, even in the U.S., it's pretty hard to ignore when your gas prices are skyrocketing, food prices, and as much as suppliers have been trying to either reduce quantities in products and lighten the amount to offset some of the inflationary pressures, they've been keeping prices modest while reducing the quantity in them. You can only do that for so long before it's just untenable. What was interesting about the day approach, I had mentioned this 4481 was a positive extreme level that needed to be filled from the previous day on the spike, and sure enough, came right back to that and filled it. It was still maintaining the weakness, and we went even further. So once we got right back above it, held on to it for just a little bit, but wasn't able to really break out past that. And then once it broke back below, that was pretty much the end of the opportunity for it to do anything, and went back to some of the previous positive streams that were even just single ones, and that but still significant, but not as much weight when you did them in a consecutive order. And so every time we ended up with these pivots below the 25, boom, it just becomes added to the short side of things, and worked out beautifully. So there are a lot of considerations. It's not like you can really hide in treasuries or anything like that, because it's an interesting setup where even if you bought a treasury, you're looking at a negative yield with what it's paying versus what inflation rate is going. And you could be losing as much as 15 to 20% per year, and probably even more than that, given the acceleration of things. And that becomes a very frightening situation as to whether or not it's not really parking your money safely. It's just putting your money in a place where you're going to lose maybe less than if there's a sell-off of some kind. So it's really problematic, and this is where some of those off assets of cryptos metals and things like that are going to be far more attractive to people. So we'll keep an eye on it and continue to stay focused on what these readings give us, because we're going to see it here because the algorithms are going to just pinpoint it for us cleanly, and we'll be able to adjust accordingly. But interesting times. As always, though, trade well. We'll talk again later.